Alright guys, I'm going to start. Alright, good morning everybody. Alright, the S&P has been trading in a pretty tight range. You can feel it's underpinned. Yesterday evening it looked like we were going to get a negative day out of the States. It ended up bouncing to end up reasonably flat in the S&P. Feeling a little bit underpinned and waiting for the major economic data that could influence further action by the Fed. Alcoa reported after the bell. The share traded lower in U.S. trading hours after the release of news that the SEC has charged the aluminium producer for violating Foreign Corrupt Practices Act, and then they did report they missed on their earnings, and I think they were down 4% after hours. So it probably doesn't set a good tone as the start of the reporting season, and we probably look for a little bit of weakness in some of these diversified miners this morning. Okay, Asian stocks are trading lower. Chinese exports came in lower than expected. Imports rose the most in 5 months, indicating to some degree demand should support economic growth. We'll have a look at those numbers in a second. And then elsewhere in Asia, we have Australian iron ore producers coming under pressure after spot iron ore price fell to an 8-month low. So again, looking at action in the diversified miners this morning, we're going to look at Anglo's, Billy's. I think they all came under pressure. Billy's down, 1.4% in Aussie, more or less. Definitely under pressure to start off today. There's the Alcoa result, 4 cents expected, 6 cents, and missed on the revenue as well. Coming out later this afternoon, we've got JP Morgan at 2 and Wells Fargo at 3. Then ex-div today, or ex-div on Monday, we have Barlow's 195, RLO 275, Nampak 98 cents, and Omnia 185. There are those Chinese figures we were talking about. Trade balance a bit light, exports light, imports higher than expected. Then we've got a slew of industrial and manufacturing production out of the Eurozone and UK. And then the one people, I guess, will be looking at the non-farm payrolls at 3:30 this afternoon, unemployment rate as well, and then at 5 o'clock out of the US we've got wholesale inventories. All right, let's have a quick look at the charts. The start of the Aussie. Aussie's been under a lot of pressure over the last few days. Despite the US markets holding up, there definitely seems to be a seller around. Probably just from an overbought market over the December period. They really squeezed it a lot. I'm looking. I think that an area of relative importance is this 40,400 area. We've got the 50-day moving average coming in around there. We've got the 20-day moving average at the moment right about there. And we've got a couple of points, if you look on this chart, that ends up being a bit of an inflection point. So I would say 40,400 or thereabouts is the area we want to look see what happens off that area. If we get a bounce off that area, perhaps we get to test the high again. If it goes through that level, then there may well be more downside, possibly to test the low again. The next one I want to have a look at is Old Mutual. Old Mutual has been trading pretty well over here, mainly because of the rand weakening so much. It hasn't been trading fantastically in London, but if we have a look at this breakout from this symmetrical triangle we had a little while ago, we still got a higher target for Mutual. We're looking at a target of around 36 rand. Based on this breakout, we actually had a perfect test there of support at sort of mid-December, which had a really good buying opportunity, which was a really good buying opportunity for Old Mutual. It's a good rand hedge play. Possibly better to buy it on breakouts. If you are involved, it might be worthwhile taking some off here and some off if we get a little more strength going forward. And then what I wanted to mention is, I know Joe's been looking a lot at these these retailers of late. We've got next week is a big week for these retailers. We've got sales growth reporting out of most of them. Shoprite, we've seen this chart here, testing a pretty important level around 157, 158. Yesterday, once we got through that level, we actually shot down and got all the way down to pretty much 155 or just above, before bouncing strongly into the end of the day. So it does show that is a reasonably important level. We'll continue to watch it. I think ShopRite expects their sales report on the 13th of January, which is Monday. They're expecting 10.2% growth in sales growth. So keep that number in mind. If we get a beat, maybe we get a bounce off this level. If not, then we could see a significant sell-off, because it is a very important technical level as well. Next one I wanted to show is the Foschini's. Another one Joe's been looking at quite a bit, making new lows pretty much every day. I think yesterday it actually had a decent day. It was up a little bit. Still only a blip on the massive sell-off that it's had. Technically it has broken down already. If we look at Foschini's, I think they're expecting 9% sales growth. So keep that number in mind. A miss on that number, you can see it sell right off to, I think Joe's targets were low 80s, possibly from this breakdown. So that could be the catalyst. The other one I would look at, I don't have a lot of conviction in this. Vodacom had a big run in December and actually broke out quite significantly from this 130 level. Got all the way close to 135. I think it was 134 and a half possibly. Tested 130 yesterday and actually ended quite strongly. So if we see a little more strength today, then possibly we go and retest the high. I mean, we have over the slightly longer term, this is a big range that is broken out of, sort of a 28 to 30 rand range, which could indicate a much higher target for Vodacom, sort of into the 160s in the medium term. I'm a little bit nervous on the market at the moment. I'm not going to jump into anything, but I just wanted to show that they did survive support yesterday at the 130 level. So another retest of the high is possible if we get a little bit of strength into the next week. And then the last one I want to show is Anglos in London. Anglos here has actually been trading okay, over the last little while. Not spectacularly, but hanging in there. Anglos in London, on the other hand, is struggling. It's very close to the low, the previous low in I think it was July, at £12. As we followed over the 2013, we followed this big head and shoulders pattern that it broke down from at 2160. I think the target from this breakdown was I think it was around £9, so there is still possibly more downside here. Keep an eye on this level. If we get a breakdown in London, it could mean a little more downside for us, just depending on obviously what the rand does, but it seems like the rand is the only thing that's been supporting Anglos in South Africa at the moment. That's all for today, guys. Good luck.